Hi, this is Acme with the Bulletin Board Heroes here at Vox Markets for Friday the 13th of May, unlucky for some. Starting off with DeepVerge, where we've had a brief dip to new lows for 2022. Flipped up again to 12 pence, which I suppose if we stay like that for the end of the day would be a reasonable look. What also helps here is we've got a bullish divergence line, so we had the lower low for May but a higher RSI low there, and bullish divergence lines have tended to be quite reliable. They're also reliable just on the basis that you tend to be bottom fishing at the lows, and so the risk reward can be good anyway in that kind of situation. But a bear trap with a bullish divergence giving us the prospect, at least an initial move to the 50-day line at 14. That's where the shares have peaked out over the last month, and then the best case scenario target, that March resistance line towards 20. But at the moment, looking for the shares to stay above 12 and then head off to 13 pence. Another situation where the bulls have been struggling of late. Here, another possible bullish divergence situation. So we've had the much lower lows for May, but the RSI actually is an uptrend line there. We are also very oversold, so there may be some appeal there for people to look to the shares at least having an intermediate rally. Just how high they could fly is probably the old support there around 5.8, 5.9 pence, which obviously would be a decent return here, possibly initially by way of 4 3/4, but just that uptrend line there in the RSI window giving us some glimmer that the stock could be about to turn. I'm just trying to get a support line in there, but I think that probably goes from something like that, which is way back in August. So if that is the case, then there would be a reasonable reaction for the stock within a sort of narrowly falling wedge type of formation. Moving on to a rather better looking situation, one which was a firm favorite, I think, last year. HeliumOne trying to regroup now, HeliumOne trying to regroup. The development today is that we've bounced off the floor of a rising trend channel from the beginning of the year. We did that yesterday around 8.5 pence, and so far a good result. It'd be nice to see an end of day close through 9.9 pence, which is the 200-day moving average. If we can get that, then one would expect 12 or 13 pence to be delivered over the next 2 to 4 weeks. I think there's also just a hint there of an RSI support line. That comes in there from back in March, and so nice sort of double-tested RSI support line there, which explains maybe why the shares have bounced relatively sharply today. If you're fussy, maybe you want to see a break of this resistance line here and the 10 pence level before taking action. Best case scenario target at the moment up to the top of that channel as high as 15 or 16 pence on a 1 to 2 month time frame, and obviously we don't want to see any price action below yesterday's low, which is sub 8.5. Because the bullish situations are rather thin on the ground today, I'm looking at a stock which I don't think I've looked at before, Made.com. And here we've had a breakout of a falling wedge. We bounced off the resistance line there, tested that as new support around 56 pence. And above that, I suppose we're at least looking for the 50-day moving average at 67. Best case is the top of the triangle from back in February up to the high 80s, which obviously seems to be, or feels like it's a long way away. The kicker here, though, apart from the falling wedge break and the key reversal to the upside today, is the bullish divergence line. So much lower lows for April and May to date, but the uptrend line there, the bullish divergence line, could give the stock some decent momentum, and that's why it has been included today. Another situation where it's not been a happy sort of period for the longs of Mode Global, especially with the Bitcoin activities that we're seeing at the moment. Here we've got another it's a bit of a DeepVerge type situation with a narrow bear trap or bear traps below the old March support, so below 8.5 pence, let's call that. Bit of bullish divergence there, so a small bullish divergence line, rather weak one, but it is still a bullish divergence. Probably want to see the shares north of 9 pence before calling the worst being over here, but 11 pence if we can get up to 9 pence on a day close basis, and that's the 50-day moving average. Fans of the shares be looking for 15 or 16 at that January resistance line, but obviously very early days yet. Another stock which has been on the back foot for an extended period is Powerhouse Energy. Here we've been the most oversold that we have been for over a year. What's interesting there is that line of support that I've drawn, and worth looking at that on the basis that to see how long it's been in place. Basically, it's an uptrend line from the beginning of 2020, and we've bounced off that quite successfully, so around the 1.7 pence level. Holding above that on an end-of-day close basis, maybe we see a little rally towards 2 or 2.25 pence, even if the shares fall away after that. On to Pantheon, which is retraced from the best levels. Here you can see that it's bounced off this uptrend line from March. That was around the 117 level, and decent price action today. If we can close above the 50-day moving average at 128, then we could retest the best levels of the past year up towards the the 150 zone by the end of next month. But ideally, you obviously want to stay above 120 now ahead of that, and still looking pretty strong for that situation. On to Quadrise, which makes occasional appearances here. Here we've got a situation where we've got this bullish uptrend line in place since the end of November, sort of bouncing off that. Not the best of setups perhaps, but while we hold above the 1.75 pence level, there could be a turnaround back towards 2 to 2.5, and the reason for the relative enthusiasm is just the way that we've got the rising 50-day moving average near the low, so that may help the shares. Finishing off with a stock which I should have covered at the beginning, but have forgotten to do. Audioboom tweeted out yesterday about the rebound on direct buying, I suppose, apart from the technicals, which are obviously even more important than that. Here we've got a rather obscure support line there from September, so that marked out the low of yesterday at £14.55. Be interesting to see now whether we can get an end-of-day close back above 16.63, which was the March support there for the shares. So that's the line in the sand. At the moment, a bit too close to call. But we've got a rising 50-day line, a 200-day line rather, and having bounced above that is quite a bullish sign, apart from the shares being as oversold as they have been since August. So everything to play for there in terms of Audioboom recovering after what has been a rather obvious shakeout in the stock. That's it from me today. More updates over the weekend.